What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is September 20th of 2017. Well, folks, it's time again on this channel to go through another trading tip, and today I want to answer a question that I get a lot from users in my community. Nick, how do I time markets? I've gotten so many questions such as, Nick, when do I know when a market is going to be overbought and when is it time to cash out of my position? And then also, when do I know when a pullback is coming and how do I get in at the lowest price possible? Well, folks, I want to be real with you for a second and let you all know that you'll never be able to time markets perfectly. It's a proven fact. There's rarely any individual who's going to be able to buy right at the exact low price and sell it right at the top. It just doesn't usually happen. So, realizing that, I want to go ahead and show you all some tips that I personally use to time markets. For example, we were able to call the past two tops in Bitcoin. If you go back to my videos, we've had a pretty consistent track record with being able to time the market and be able to swing trade it. So, how are we able to time the market better even without even using indicators? It's pretty crazy sounding, right? I'm going to share with you all the top 3 tips that I use to time the market better, even without indicators. The first one I want to talk about is the big evens. You've probably heard me mention it on my videos and live streams before, but the big evens are one of the most simple price strategies you can use to know when markets are overextended or oversold. So let's go ahead and talk about that. So for example, in this case, we saw Bitcoin originally on its first major bull run of the year get stopped out at 3,000. Now we've been talking about it on my channel about how 3,000 was a very big even. Now, how are we able to call that relatively perfectly? We saw that, it hit 3,000. We said, guys, be careful about it. And then after that, it sold off. Reason for that is because it's a part of human psychology in markets. You really have to learn about human psychology if you're going to be doing trading. And one of the first things that anyone will tell you is that humans like to buy and sell at big evens. It's a weird thing about us in markets, but you'll find that a lot of the time, if you look at the order book, there's massive sell order amounts at big even numbers comparative to random numbers. So for example, what would you be more likely to buy in at? $30 or $31.50? $30 is more common. It's a big even number. And the larger you get in the sense of where you get to around thousands, for example, at this case where we saw 3,000 as a level, you're going to have large sell walls that need to be cleared by individuals on the buy side. And sometimes there's not enough power to come in. Not to mention markets are usually overextended if you're looking at these big even values up ahead of the current price. So again, 3,000 was a clear sell side action. We saw drastic selling all the way down to 2,200 and then a continuation down to 1,800 as well. So it was a very big pullback. And the same up here around 5,000. 5,000 is a very big number. If you looked at any exchange, the order book was slammed with sell orders at 5,000. Again, human psychology. Always be a few steps ahead and be a little less greedy than those who are just like, oh, I'm just going to sell at 5,000. We want to be able to sell maybe around 4,900 or 4,950, depending on your risk profile, but always get out a little bit before those big evens. And if it clears through it, you can get right back in and hopefully ride out for the bull run. That might be continuing afterwards. So again, and the same goes with the sell side as well. 3,000, for example, at the bottom is a big even. 1,800. Though we weren't going to go all the way to 1,000, some people thought we were, you look for the 100 levels in that case, for example, if you get something at 3,000. So 1,800 we didn't call perfectly, but we did believe that we'd at least get below 2,000, and generally that's where we went. So it was a 33% pullback, generally speaking. Again, always look for the big evens. It's a big help factor in trying to time the market. The second one I want to talk about is previous price levels. This is something that you get as you go through and form market history. So for example, Bitcoin's been on a stellar run up over the past year. And a lot of people were telling me, like Nick, when we were up here and stuff, a lot of people were overexerting. They said, Nick, Bitcoin's never going to pull back to the levels you're talking about at 34 to 3,500. And we actually pulled back further. I said not only could we go to 34, 3,500, but we could get a full pullback back to this previous resistance level. So why did I think that? Because previous resistance usually tends to become support. And we'll find this as we go through and look at this run-up. You can find it in multiple cases. How do we know this? Well, let's go back to this pullback, this run-up over here. We had the initial run-up in Bitcoin to 3,000. And look, we got some support here around the 18. I think the bottom of it was at around 18. Let me see, what was the price there? 1830. Well, where have we seen this as previous resistance in the past? Right here. Again, this is why when I was talking to you all over here, I said that this might be where we find support. But it turned out actually that we pulled back all the way to the most bearish potential price possible, which was over here at 3,000, a big even. Remember, big evens matter as well. So we pulled back. What was previous resistance, we had resistance here and resistance here, was now support. Again, very common principle. Previous prices, especially previous resistance, tend to be support after you've run past them and you're looking for a pullback. So when we have the next run up, whenever it is, I don't know if it's here yet, look to see if once we maybe pass 6,000 or 7,000 on Bitcoin, we might get a pullback to 5,000. Could happen in the past. It's not guaranteed, again, just like how indicators aren't guaranteed, but it's a common thing in markets. Previous resistance usually becomes support. And the third thing I want to talk about, and this is something that you generally have to have some street smarts with, and you got to stay active with. And this is simply looking around and seeing if everyone claims to be a genius. I know that seems kind of silly. Well, what does that mean exactly? When you start looking around and you start seeing the headlines flash, Bitcoin's gonna rally to 10,000. Everyone's making money left and right. And for example, you'll see people who'll be like, "Yeah, I'm up 50% this year." And the market's up 100%, and everyone thinks they're geniuses and they're making money, even if they're on the losing side of things. That's when you should be a little bit worried on markets. When markets have gone up 2 or 3 times their previous valuation at the lows, that's usually when you want to look for, cashing out some of your positions. And then also the opposite goes as well. When everybody is absolutely in panic mode, when everyone's losing everything and markets are down 40 to 50%, when the headlines are flashing Bitcoin crashing, continuing to spread the flooding news, when everyone's just panicking, going crazy while you've been cashed out for a while calling the pullback, you see everybody panicking. And you're going to be there like, okay, it's a shopping day. Everything's off at a 40 to 50% discount. Nothing's fundamentally changed. Time to buy in. And a lot of us did that on this channel. In our community, I was advising people that, again, I was waiting for 3,300, 3,400. And I bought in my first position at 3,350. And I started buying up some altcoins. And again, made a great return up to this rebound. Even though I didn't pick the exact low, I was able to time the market. I got out of my positions up here and got in generally at around the bottom. So again, no genius indicators needed. It's just simply knowing these basic market principles to know how to time when markets are overextended or oversold, and to be a few steps ahead of the game and not trade emotionally with the market. We're riding against the wave of the market. The market's overextended, we're getting out. Market comes down, we get in. We're not going to ride down with the market. We're going to get out early. And we're also going to get in when the market thinks that, when the market seems like it's going to collapse, Again, it's just simply cutting out the emotion and keeping these very simple principles in mind. Well, folks, that's it for the video. I hope you all enjoyed these tips today on timing the market. Do you apply them to your trading currently? And also, I want to be clear also as well, you can use this in investing as well. You don't need to always sell up here, but this could be a great way to know how to time markets in the sense of buying low and buying into all the flooding in markets as well. So anyways, everyone, that's it for the video. I appreciate you all watching. Please leave a comment down below if you all want to see something covered on the Trading Tips videos. But until then, everyone, I will see you all in the next video.